given the recent pricing correction by NERSA, purchasing power, this weakens growth. The solution to this crisis is not a higher level of inflation, but rather sector-specific reforms to improve efficiency. Our inflation projections also have upward adjustments to food and services prices, partly offset by a stronger exchange rate assumption. Overall, we expect headline inflation to average 3.4% this year and 3.6% next year before reverting to 3% during 2027. We assess the risks to the inflation outlook as balanced. Against this backdrop, the MPC decided to keep the policy rate unchanged at 7%. 4 members preferred to keep rates on hold, while 2 favored a cut of 25 basis points. Since September last year, we have reduced rates by 125 basis points, and we want to see how this is affecting the economy, how expectations evolve, and how inflation risks are resolved. The forecast has raised easing gradually as inflation returns to the bottom end of the 3 to 6% target range. The MPC emphasizes that stabilizing inflation at 3% rather than 4.5% implies a lower, longer-term level for the policy rate. That said, the rate path from the quarterly projection model remains a broad policy guide. As usual, our decisions will be taken on a meeting-by-meeting basis with careful attention to the outlook, data outcomes, and the balance of risks to the forecast. In our economic modeling, inflation expectations play an important role in shaping the transition to our 3% preference. Given uncertainty about the behavior of inflation expectations, for this meeting, we considered scenarios where expectations adjust more slowly than they do in our baseline. These scenarios treat expectations as more backward-looking, with less attention paid to the SABC communication. The scenarios show a slower convergence to inflation at 3%. The policy stance is somewhat tighter over the forecast period, with roughly 1 less cut expected and moderately lower growth. There are 2 important takeaways from the scenarios. First, the disinflation process in our forecasts does not rely on optimistic assumptions about the behavior of inflation expectations. It is robust to alternative assumptions which generate similar inflation trends. Second, there are gains to be had from clear and credible communication. In this regard, it is desirable to finalize target reform. Accordingly, and in line with the recent joint statement from the SAP and the National Treasury, we look forward to agreeing a new target as soon as is practical to better anchor inflation expectations. That concludes our statement, and at this stage, I will invite you to pose any questions that you might have, and I will then deal with them. Please, as usual, identify yourself and the media house that you represent.
Greetings, governors. Sfundo from Reuters. So you said 4 members, two members decided over here. Sorry. Yeah. I just wanted to find out what was the reasoning behind the 2 members that decided for a 25 basis point cut, And then my second question is around the recent inflation expectation survey results that see inflation settling above 4% in the longer term. Does this change your forecast for achieving your 3% goal in any way? Thank you.
Is that the only question? Oh.
Good afternoon, Governor, and the rest of the panel. Thank you so much. My first question is just a follow on Sfundo's on inflation expectations. You make a point that they were backward looking and that they didn't pay attention to the SABC communication on the 3% preferred target. And I just want to find out, given that, how much weight did you give to the inflation expectations in making today's decision? And my next question is on the administered prices. You have increased your forecast for inflation largely based on that. And I just wanted to find out how much of the administered prices actually affected your higher inflation forecasts. Thank you very much. And does that undermine your journey towards the 3% target? Thank you.
Last one in this round. Everything thoroughly addressed. Okay. The reasoning of 2 members on why the rates should be cut is the same as the reasoning of the 4 members who felt that the rates must be kept the same. As you'd heard, we said we expressed preferences and we deliberate, and eventually the decision was that we keep the rates the same. If you look at what our assessment is, you would see that the assessment is about both a hold and an adjustment lower, and which is why we are then saying that it's important for us to take a pause and see what the effect of the 5 cuts that we have made so far have on the economy. BER inflation expectations are a welcome development. They have declined for the first time to below the midpoint of the inflation target. Too early to tell, but if that direction of travel continues, it would suggest that the price setters are seeing convergence towards the lower inflation target, and that is how we deal with that. The question about yes, the inflation expectations being backward. Be careful. What we assess in the statement is a scenario. We say that let us suppose that the price setters are backward looking, in which case they do not take cognizance of the fact that the SAP is saying we have lowered the target, and because we lowered we are now focusing on the lower end of the inflation target, and thus expect that expectations will converge towards that, but they do not do it because they are backward looking. What would the implications of that be? And in that scenario, it would mean that you would have the rate path will have 1 less rate cut. What that means is what we had always been saying. High inflation begets high interest rates. If we are to have low inflation, if we are to have low interest rates, we must have low inflation. And that is why we decided that we must model a scenario where the price setters do not converge towards our 3% preference. Admin prices, again, we have referred to electricity as having an impact. But it is not the only thing that had driven a revision of the forecast higher. We did mention the issue of food prices of both meat and vegetables, and we had also mentioned that the fuel price inflation is not declining as fast as it was in the past, and that meant that we ended up revising inflation higher. It could have been even higher if it was not accompanied by the fact that we have got a stronger exchange rate assumption that had been brought into the picture. To be clear, the fact that administered prices are rising faster than inflation is no reason for us to tolerate higher inflation. If anything, those higher administered prices they are not only a problem for inflation, but they actually also have an impact on growth. So we are going to have to rein in administered prices, and reining in the administered prices would entail a process of engagement with the administered price setters. Those are the 4 questions I have. Any other hands? Anybody online?
Yes, I have a question from Palesa Mofokeng from CNBC Africa. She asks about the sacrifice ratio. She asks, has the South African Reserve Bank calculated what the sacrifice ratio might be?
Is that the only one online?
That's the only one online so far.
In the House?
Governor, thanks very much for taking our questions. Alistair Ball from Bloomberg. I thought it was very interesting in your remarks that you emphasised the importance of clear communication around the inflation goal, and then noted that the SARB would welcome clarifying that. Have you been speaking to the finance minister? Would you say that the two of you are on the same page as this? And could you characterise for us the importance of having the political back-in of the finance minister in sort of kind of clarifying where he stands on this? Thank you.
Online?
Yes, Governor, I have a question from Artwald Lamini from Alliance News. He asks, how long do you expect your assessment of the effect of interest rate cuts to last before forming a full picture of their impact?
Can you read it again?
Sure. How long do you expect your assessment of the effect of recent interest rate cuts to last before forming a full picture of their impact?
Okay. Who wants to be sacrificed? Chris, we will sacrifice you. Yeah, we will sacrifice you. Deal with that.
Okay. Thanks. Happy to be sacrificed. So we haven't been asked this question in a while. There's a stock answer, which is that our model will generate a loss of GDP of between 0.3% and 0.4 percentage points of GDP off the growth rate for a 1% rise in the interest rate. It's worth keeping in mind that that is a kind of estimated value consistent with other central bank models around the world. If you look at some of our research, you'll see a wide range of modeling using different sacrifice ratios that will give you different numbers, as well as quite a lot of evidence looking at sacrifice ratios as they pertain to particular periods of time in South Africa's history. And those sacrifice ratios vary widely. Some of them are even positive, and some of them are more negative than the ones I just spoke about. Thanks.
Okay. For the benefit, when the sacrifice ratio is positive, it means that reducing inflation is good for growth. So the calculations vary from reducing inflation is bad for growth, which will be that 0 0.3 to 0.4. 2, actually reducing inflation yields to better growth, and that is what you face. Dlamini, how long would it take for us to assess the effect of the cuts? We do this meeting by meeting. The effect of one cut in our assumptions is that it takes 12 to 18 months to feed through, and we have been cutting since September. We have cut 5 times since September last year. Each one of those cuts will have a different effect, and we will take this meeting by meeting as we assess the outlook. Alistair, have we been talking to the Minister of Finance? Always. We are always talking, and part of the reason why we referenced that joint statement is because that joint statement captured the conversations that the minister and the bank have been having. That is where I would leave it.
Hi, Governor and panel. Thanks for taking our questions. Jana Marks from Business Day. Given your emphasis on the importance of clear and credible communication in anchoring inflation expectations, do externally driven price shocks, such as the recent tariffs, necessitate a different approach in how the SARB communicates its policy stance? Just for interest's sake.
Good afternoon, Dawaza from Newsroom Africa. This is for interest rates, sake for just average South Africans. You are back into this building after being in Irene. How did the SARB deal with the inflation pressures of moving back into this building, things like furniture and all that kind of stuff?
Inflation pressures of moving into the building. We are the central bank, and we bargain very hard, and we invite the suppliers, and they are very clear. They know it that we are tough bargainers when it comes to that. We started the process of renovation, by the way, at the time when the construction sector itself was under pressure. And so getting good prices was not a very difficult thing for us to get. And many construction companies were almost bidding just to be able to cover their overheads, and many of them even reduced their margins, and that had been the nature of the game. So you could say that our timing was a good one. Jana, external tariffs, I think that, we say, how does it affect? Let's be clear. The tariffs are paid by the country that imposes them. So if South Africa imposes tariffs on US goods, South African consumers are going to pay higher prices. So the US, in this case, has imposed higher tariffs on a number of countries. The US consumers are going to pay for it, unless the exporters to the country that had imposed tariffs decide to reduce their prices to accommodate the fact that there are tariffs. But that can only be a short-term measure. Alternatively, in that country, the other suppliers might decide not to pass the costs to the consumer, or only a part of that to the consumers, or it could be a combination of all of those. And that is why when we had to assess the impact of the imposition on tariffs on South Africa, we put it more in a form of a scenario. We had found that the impact is bigger on growth than it is on inflation. And the impact on inflation was very much driven by an expectation of a weakening.
One more, Governor, from Bloomberg. Governor, given how GFECRA profits have performed, has there been a conversation between yourselves and the National Treasury to tap in that reserves to help pay out some of our debts to make for a better risk profile? Thanks very much.
Would you have still had your that one extra cut that was removed? Would it have still been there if the settlement with NERSA and Eskom hadn't happened?
The mic was a bit.
So you indicated that one cut had been removed. Would it have still been there if the NERSA settlement hadn't happened with Eskom?
Monique, again, it was in the scenario. We said in the scenario, if the expectations are backward-looking and do not take account of the trajectory of the SAP and the communication from the SAP, there would be one less cut.
We didn't say that there will be one less cut because of the NERSA adjustment. So I just thought that I should clarify that. So, Kwana, you said, have we had conversations to tap into the GFECRA reserve? There is no GFECRA reserve, but DG Kasim here will walk you through GFECRA because he has been having those conversations with the Treasurer.
Thank you, Governor. So, just a bit of background. It is not unusual for central banks to remit excess profits to government because we are an independent central bank, but our balance sheet is part of the consolidated government balance sheet. What we did last year was we began to regularize GFECRA payments because for several years we didn't do much. In so doing, to help the public, we've released an MOU on the website signed by the minister and the governor, and I encourage people to look at it, that explains the annual process that will underscore whether there is a distribution for GFECRA or not. So what it means is that there could be a very healthy distribution in 1 year, there could be nothing in the next year, there could be a year where the Treasury may have to replenish, given the law, replenish GFECRA, assuming that, for example, there's an exchange rate appreciation for a couple of years. So we are in the process now. The timing is that once the SAB has finalized its balance sheet, its consolidated audited balance sheet, if there is an excess GFECRA, we will then kind of discuss and present to the Treasury.
To the SAP and our renovated building. Hope to see you soon here with your editors, that we could have a longer conversation. That concludes the business of today. Thank you.